Bitcoin. Once you understand what makes a network valuable, these things are much easier.
I think people should stop worrying so much about this price drawdowns. If you understand what Bitcoin is, when the price goes down, it means you get to buy more Bitcoin. It's a gift.
We had the largest Bitcoin sell-off in 2025. In the last 24 hours, 80,000 Bitcoin were sold at a loss in exchanges.
When this cycle peaks, a lot of people have PTSD from 2021 because the business cycle and liquidity peaked in March.
The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 200,000 range and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect.
As the market comes off a week of uncertainty, with Donald Trump doubling down on tariffs, rising tensions with Fed Chair Jerome Powell, everyone is bracing for major economic impact. Today, we hear the latest prediction from Real Vision CEO Raoul on Bitcoin, crypto, and where the market is headed in the coming weeks. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. With the keen eye of a seasoned investor, Powell casts a spotlight on Bitcoin and the expansive cryptocurrency market, recognizing its significance against a backdrop of economic uncertainty. Bitcoin is sitting just above $84,400, up almost $1,300 in the past month. Amid this fiscal tightrope walk, Powell discusses not only the economic indicators, but the absolutely parabolic surge in crypto prices we're about to see. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Let's get right into the interview as he gives his latest Bitcoin prediction and where we're headed in the coming months. Drop your comments down below and subscribe if you enjoy the content we do here.
2020 was that massive fall in the business cycle, massive stimulus. It was just a completely squashed cycle. Now, if I look at the business cycle, the ISM survey still below 50. We've barely started going up. So it feels that the probability is this cycle plays into the end of the year. And that's a tail risk. I think the market's going to struggle with this. If I'm right, Bitcoin, all of those. Once you understand what makes a network valuable, these things are much easier. People are going to get out of risk too early, and they're going to be forced back in at the end, and you get that 2017 final explosion. That's kind of my working hypothesis now. Yeah, we got two economies, and people can't see it. One is driven by liquidity, which is the tech stocks, and all the others live off debt and earnings. And if you ask the average business across anywhere in the United States, they're not seeing a boom time yet because the ISM survey is below 50. So we're not. So we've got two different forms of economic growth, and half of the growth that we got right now is the tax and other stuff that's happening. So it'll work its way out. The economy will slow down. The Fed will get more aggressive is my general view. So given this, we broadly agree, and again, we don't have a crystal ball, but we broadly agree. So let's talk about asset allocation at top level. From my perspective, as the ISM survey picks up, in fact, when it crosses 50, is pretty much the perfect signal for alt season. So the US is going to agree to weaken the dollar in exchange for whatever Trump's going to exchange for. And there's a whole Taiwan trade to be done in this as well. But the point being is, this is almost identical to 2017 when Trump came in. Right? Trump came in at the beginning of the year, said the dollar's too strong because the dollar had been ripping on the tariffs idea. Rates have been going up. Trump said the dollar's too strong. China were in the same situation. And the moment the dollar weakened, China carried all of global liquidity. In 2017, the Fed were raising rates, USM2 was going down, and they were doing QT. So ordinarily, most people who would look at the market and say, well, that's a terrible market, risk assets are going down. But no, China just dwarfed everybody by hitting the print button. And I think it's going to be the same thing. So I think the Fed had much more cover than people understand. Again, people have PTSD from last time. They stick up the chart of inflation versus the 70s and say, see, this is going to happen all over again. I'm like, no, it's not. It's not even close.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone, a period characterized by parabolic moves upwards in crypto prices. He also acknowledges that BlackRock's recent entry into Bitcoin will transform the crypto landscape as we know it, as more institutional investors pour in. This dramatic increase in capital will drive Bitcoin's price significantly higher, like we saw in the halving early last year.
The business cycles have been almost like clockwork, 2-year up cycles, 1 year peaking, 1 year down. And that corresponds. What's amazing is the Bitcoin halving cycle is the same as the debt refi cycle, which is, I think, what drives everything. It's the same as the election cycle. They're all the same thing. So, if that continues to repeat, then it should go until 2026 when that should be a bear market year. But, let's see. So I am obviously very bullish. I don't know. And I was talking to Nova about this yesterday. I've got 3 outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect, because people are quite scarred because the last cycle seemed shorter than most people expected. Everyone thought there was another final leg higher, and that never really happened. The kind of 100,000 Bitcoin, the laser eyes idea never got there. But maybe this time the shock is for excess returns beyond expectations. The other side that I grapple with as well is, well, maybe the whole cycle's front-loaded, and in fact it's shorter, but more violent in 2024. So those are the 3 scenarios that I'm juggling in my head with, but 60% probability is it just does what it says on the tin and repeats what it usually does. For retail, it's just price action, and what's likely to happen is the moment the Bitcoin ETF is launched, the market will focus on front-running the ETH ETF. If the previous front-running made money, they'll do it again. So retail will get very interested, and ETH's a broad, deep ecosystem, and people are happy to get exposure to it. The institutions, it depends whether they give the yield of ETH in the ETF or not. If not, a lot of the institutions would prefer to own ETH itself, because then they can stake it and get yield. Because if you don't give them yield, some asset manager who launches the ETF's going to get rich. BlackRock, they'll make all the money because they'll get the ETH staking yield, and they don't give it to the ETF holder. And we've seen that very commonly in ETFs in the past. So I think that's the thing, because when I speak to institutions, they get ETH because it's just like, here's a bet on technology. It's a broader based thing, and we get a yield, so we can just sit on it, which they don't get with Bitcoin, but they understand the Bitcoin story as well. So they understand there's 2 different things here at play.
Today, as we step into a world of financial intrigue and dynamic market forces, driven by collapsing fiat money systems, rampant inflation, and bank failures, he suggests transitioning to a Bitcoin standard. As the world grapples with the impending crisis, he asserts that the promises made by the central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, this will not lead to a return to the status quo. Raoul says this being a significant development in the financial ecosystem. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. That nation-states adopt Bitcoin and incorporate into the global economy before the inevitable collapse of the current monetary system as we know it. That explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that a long-expected surge awaits. As Bitcoin's price is expected to rise exponentially in the first half of 2025, and fully expects not only a pullback in the S&P 500, but that institutions are playing a huge factor in the volatility we're seeing. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.